Bitcoin rebounds on good economic news, but is still pinned in the range. Hey guys, it's Keith Allen. What a week, man, right? Crazy week, wild ride, busy ass day, but wanted to crank out an analysis for you guys, have something to marinate on over the weekend. Hope you had a good week. Hope you didn't get shaken out, because I really do believe that this was really just another shakeout attempt. Of course, we had some catalysts to help us with that shakeout attempt. Obviously, some serious unrest going on in the Middle East, but some bigger scares here economically that I think the market was even more sensitive to was this longshoreman strike that we had here in the U.S. on the East Coast. Obviously we had some economic news pending. Well, good news on the economic front, really, on all counts. Before we do that, real quick, just a bit of housekeeping. I want to remind you, if you like the streams, do me and yourselves a favor and click those buttons down below. Right, click the like, click the most importantly, click that comment, the subscribe button, that little bell up there on the top if you're watching on YouTube. And if you are watching on YouTube, the live comments are open, so I invite you to come join me and chime in if you got a question or some insight you want to share. Would love to hear it. So with that, let's go ahead and jump in and talk about what has changed here. So this longshoreman strike, this is a big deal. This is actually a huge deal. And, I don't know if you're aware, but if you think back to back in the early COVID era, if you will, we had some serious supply chain issues because shipping was restricted, ports were limited, ports were bottlenecked. I think there was an issue with the Panama Canal, and it was taking number one, containers weren't coming out of China. Number two, at the normal rate. Number two, as they were coming in, we had bottlenecks and serious supply chain issues, and so those supply chain issues ripple through the entire economy. And we were on the verge of having a similar problem here with our East Coast, actually from Maine, which is the Northeast United States, all the way down south through Florida and around to Texas. So literally half of the country. And so that just would have a tremendous negative effect on the economy here, because if it's not just a matter of whether stores can get the materials that they're selling. Manufacturers have supplies that aren't coming in. Auto manufacturers need parts, and they can't build those cars if the parts don't come in. Home manufacturers and construction workers need materials, and they can't build if those materials don't come in. So fortunately, that crisis was averted. We got news across the wire late last night that the Longshoremen's Union had come to an agreement to get back to work. They still have some things to work out, but getting back to work means that they can start easing these bottlenecks that started after 4 days of picketing here. So they have indicated that for every day that they were picketing, it would take 3 to 5 days to catch up. So we've got a couple of weeks until things normalize a bit, but the fact that a greater economic crisis was avoided is a huge thing. Now, before the market could even really settle into that, or even got that news around the world, we had another dose of economic data that the market was holding their breath for, and we saw that come across the wire this morning. Sorry I didn't give it to you then. I was in an appointment, couldn't be online. I did actually try and post some things on Twitter this morning while I was in physical therapy, but now looking at things, I can show you with a little bit more clarity of what has transpired here and why the market, I think, rebounded so well here today. So as you can see, we had, of course, a breakdown. This was our monthly close, right? We had before the monthly close, we had rallied, right? We rallied past we bounced off the 21-day moving average. We rallied past the 50-day, the 100-day, even the 200-day moving average, and even more importantly, the 2021 mid-cycle top. And this looked like we were going to be in a prime position here. And then the monthly close came and things broke down, and they broke down hard. And so, whether this was tension in the Middle East or this was just kind of poised to happen. Quite honestly, I think this was just kind of in the cards, to be honest with you. But whatever the case, we had what was that? About a 10% pullback here, and that's, if you look through the history of Bitcoin, that's normal. People panicked. I don't know why. We've seen this time and time and time again. So I think that was a big shakeout event, and hopefully you weren't a victim of it. You can now see that we found support at the 50-day moving average, tested it a second day, tested it a third day, actually wicked below 60K briefly, and recovered here today on this news. So I think the big catalyst was the economic data that came in today. The non-farm payrolls came in way hotter than expected, scorching hot, as a matter of fact, which is a good thing. And the unemployment rate actually came in cooler than forecasted. So, I think a lot of people were expecting things to stay, pretty static around 4.2%, actually dropped 4.1 to 4.1%. And that speaks well in terms of, number one, the Fed's decision to start the rate cutting cycle. And number two, the potential for that softish landing. So all in all, good news here on the economic front. Let's see. Looks like we got some comments in the game. Let's see who's here. Hey, 55. Good to see you, man. Thanks for the follow. I can't even pronounce this guy, but yeah. Good morning to you. It's late afternoon for me. It's about 5 o'clock here in the U.S. So I'm gonna be wrapping this thing up soon. Rebound to liquidate longs. Well, actually, it rebounded to liquidate shorts. Whether it comes back after longs after this, that's entirely possible. I think that we are in this range until we break out of this. And I think that, that's obvious, right? Let me rephrase that. I think we're pinned in this range until we see some validation that things are going to change. And I'm going to show you what those are. Believe it, we'll go with NASDAQ key is that. Do you think there'll be black swan in the U.S. market economy? Well, listen, the black swan is always circling the pond. And quite frankly, this longshoreman strike could have developed to that. If this was an extended strike, it could really, really have been a bad, bad thing, especially as we head towards the holiday season, right? So that one avoided. But gosh, I mean, look at what's happening in the Middle East. I mean, if that's not a black swan hovering and waiting to happen, it can. And look at this U.S. election and all of the, not just the geopolitical tension around the world in the Middle East and between Russia and Ukraine and China and Taiwan, but how about what's happening here with our U.S. election, which, let's face it, we know it's going to be a freaking mess. I'm not going to get into the big political discussion here, but we know who's trying to make it. We know who is trying to seed chaos and doubt and undermine this thing. So those games are not going to end anytime soon. So that also has the potential to bring a black swan to us. The black swan is usually something that we're not expecting, though. So keep that in mind, right? We're always looking for it. But how often is it the thing that we're looking for, right? That's what makes it the black swan usually. So let's go back to the charts. And as we were talking before, we're kind of pinned in this range, and maybe this is where we are for the weekend, at least for the brunt of the weekend, until maybe we make a move towards the weekly close. But these technicals right here, I look at these moving averages and this mid-cycle top, all this technical resistance, right? And if we look at fire charts, we take a look at the order book, we can see that we actually have some ask liquidity, sell walls, if you will, that are well correlated with where those key moving averages are and where that mid-cycle top is. Mid-cycle top is just sub 65K. Key moving averages here in this like 62 and change to 63 and change range. And so they're not huge, right? These aren't huge walls. That's what, 10 million bucks, 11 million, and another 10 million, with like nothing in between, right? These darker areas will cut through like butter. Like we cross the 62, the 63 level, we're going to go straight to this next rung, and then if we can clear this, then we get back to this mid-cycle top, and then we have some really some pretty clean air to get to that 67K, and really where I think the key areas are that I'm looking for, and I've been looking for a long time, is to reclaim this 2021 top. Yes, there are higher highs up here that are really what's the most important, but as I've said all along, until we're printing those full candles above this 2021 top, um, then we can't get there, not sustainably, in my opinion. So, I mean, it has been a long time. It's been since mid March, and so we saw something similar. And I'm not saying that this is going to play out the way it did in 2021, but there are some similarities between what we see here versus what we saw back then. In other words, what we're seeing now could be, there's some that say that we've already topped out. There's some that say that that's a mid-cycle top. And there's some that just say that this is going to run to, ridiculous numbers that I don't know how anybody can have confidence in those numbers in terms of the time frame for this particular cycle. So, we've got time. I think this is a game of patience at this point. I think it's important not to allow yourself to get shaken. I'm to the point, and listen, I've been trading actively since 2017, and I'm to the point now where I feel like this is, I hate to go to a classic old guys adage, but time in the market, for me anyways, is working out better than trying to time the market in a lot of instances. And so I'm zoomed out. I'm not allowing these little dips to shake me out. And I am, I'm happy to buy deeper dips, but I'm not at this stage looking to give my Bitcoin to anybody unless I see a breakdown that indicates that we're coming. We're printing lower lows, and we're going to lose this trend line. That happens, that's a different story. But in the meantime, I'm looking for a higher high and higher lows. And we do technically have our first higher low here. And we do have technically, whether you want to call this a higher high or not, it's not a significant one, but you got to start somewhere, right? You got to start digging your way out. So we had lower high, lower high, lower high, lower high, and now and those all had corresponding lower lows, and now we have our first higher low and what looks to be a higher high forming here. We obviously looking for this bounce to work its way into another higher high, and work into this 71 and 72K level, and then ultimately go after the all-time high. So in terms of zooming out, as I mentioned, first of all, on this weekly chart, you can see that whales, especially purple whales, have been buying consistently through these consolidation ranges. And we do have support reinforcing down here at 60K. And I expect that to hold at least for the weekend, and hopefully longer, especially if we want that scenario where we've just seen a higher low put in. Right. So let's zoom out a bit and see what this looks like in the grand scheme of things. Right. Here's your higher low. And, here's one higher high. Now, notice we have this big bright spot here. Right. And we did have a nice bounce off of that until things obviously started breaking down. But notice I'm going to zoom out even further. I'm going to go to the 3-year chart and show you just historically that, when we've talked about this in the past, that you need to see these brighter areas of liquidity for price to really move, and that price tends to bounce off of those, and that happens in both directions, right? You can see when we've got big ask walls up above, price moves down. When we have big bid walls, price moves up. But it doesn't typically move in straight lines, right? It's up, it's a consolidation, it's up again, it's a consolidation, it's up again. And so at this point, um, we're not seeing the brightness on this chart. Well, I guess I can make it that way, right? At this point, we had bounced from here nicely, but that was not a one-way ticket, right? So we're looking to build on this. And if we can get past this 63K resistance and then into that 65K where that mid-cycle top is, then we can start going after this in the 70s. And that's essentially what I'm watching for. Hey, Alexander, thanks for joining me again. I appreciate the support and the kind words and the follows. So with that, guys, unless you got anything else, I'm gonna go ahead and wrap it here, and hope that you all find something in this analysis that helps you out, gives you a little bit of insight, and helps you, at least, if you're freaked out, helps you, maybe talks you off the ledge a little bit. And if you're confused, hopefully gives you some clarity on where, why price is doing what it's been doing here this week, and gives you some uh, something positive to look at for the outlook, whichever way you're trading. And I would just say this, right? If you have conviction, if you have I'm not saying that I'm right. I'm saying that these are my assumptions. This is not financial advice. This is how I'm interpreting the market, and this is how I'm trading it. You got to do what's right for you. And if you have conviction that the bottom isn't in and that there's a new all-time high happening before this cycle is over, then I encourage you to stick to your plan. Likewise, if you have conviction that the top is in, then I would ask you to check what your validations are for that. Wherever you're trading, whether you're long or short, know what your validations and your invalidations are, and stick to your plan. Simple as that, right? We can't both be right, but we can be right partially, right? We can be right in the short term. We can both be right in the short term, because until we make it past this level up here at 70K, um, we can range, and we could range all the way back down to 50K or potentially even lower, right? But I think, at least for the moment, I think that, it's good to see this support here at the 50-day moving average. What I really want to see on the weeklies is reclaiming this 21-week moving average, which of course, that's relatively close to where the 200-day moving average is. Essentially, if we get up here, we're past the moving averages. We just got to get past that mid-cycle top and then the 2021 top and work our way into this range up here. So I do what works for me. You do what works for you. But again, I appreciate the follows and support. If you like the stream and you haven't done so already, do me a favor, hit that subscribe button. And if you got a comment, please, by all means, leave it. I love reading the comments, and I engage with each and every one of them. With that, I'm going to wrap it, guys. Hope you have a fantastic weekend. Take some time, back away from screens, or do something you love with the people you love. Have a great weekend. And as always, trade safe, my friends.